At a particular time, as I mentioned, at the early 20s when I get into the bank, I'm thinking that's my life career, that's my life employer. And after 6 years, I'm thinking if I continue to do that, what I will be after 20 years. So I seeing a lot of senior staff. Yeah, they're still doing the routine things. I was thinking, is these the routines I really want to do for the rest of my life? A lot of, as I say, a lot of things can't really plan because you never know when you quit the bank how many customers you have, how many business you have. So this is a very good platform for us in case that we don't have enough business. But at the end, in reality, is after a few years, we realized is our own customer is more than their database. So government guarantee is for first home buyer, you only need 5% of the deposit, and the government provide guarantee to waive all your mortgage insurance. So that's very helpful for the first home buyer to have their first home. Currently, using the equity to purchase investment property is still available, but the equity is not as much as in the past because the property value increase is not that quick compared with the past.
Okay.
And also, in the past 18 months, we see the number of investors, especially in Victoria, has dropped dramatically.
Disclaimer. The information in this Victory Line podcast is for general informational purposes only. It is not intended as professional advice, including financial, legal, medical, or other expert advice. Always seek the guidance of a qualified professional for your specific situation. The views expressed are those of the individuals and do not necessarily reflect those of any associated organisation.
Welcome to the Victory Line podcast. Lion!
Today is about the power of you. You will change the world.
And now your host,
OP Jayasinghe.
Hello, Mr. Jeremy Jing. Thank you for your time. I appreciate it.
Yes, thanks for your time here.
Thank you. I've obviously now known you for about good 6-7 years. Right?
Yeah, long time.
Long time, and thankfully you've never failed me, right? I can go on and I'll share some of those stories later, but thank you for always being there for me and my family, pulling us out, giving us a roof over our head. So I thought it's not nice for me to keep you all to myself. That's why I wanted to catch up with you, share you with the world, so to speak. But if I can take you back to prior to you even coming to Australia, let's start with your childhood. Tell me about you.
Childhood. I was born in Shanghai, China.
There you go.
My childhood, and you can tell my age. And so the childhood is totally different technology, right? So, at our childhood, there's no telephone, no mobile, no internet, no computer. I think probably everyone's the same. And I do the high schools, primary schools, and the first year of the university in China.
Okay.
All finished, and then I come to Australia.
Okay.
So
By yourself?
By myself, yes.
Okay.
Yes. But at that time, we talk about last century.
Yep.
That was 1999.
All right.
So at that time, the China is different China.
Yeah.
So when I come back to Shanghai now, the street name still the same, but none of the building, I cannot recognize any of the buildings from my memory.
So it's done that much
No, it's totally
redevelopment.
changed.
Yeah.
Yeah, it's totally changed in the past like 30 years.
Okay.
So yeah, that's the childhood. That's the time I spent in China.
Wow. So, since you were, young kid, you were there. Parents are still there at the moment?
Our parents are here.
Parents are here? Okay,
Yeah.
they migrated here.
Yes.
Siblings?
No.
No. You're the only child?
Yes.
Of course, it was that era, right?
That's from my age. So I think in China it's from 1979 or 1980.
Yeah.
So it's when child policy starts.
Of
So
course.
I pretty much is the first section.
Wow. That's a silly question from me, but that makes sense. That makes sense. They've reversed that since, right? Now they're encouraging.
Correct.
Okay.
Overnight.
Yeah, overnight. That's
Yes.
incredible. Okay. So do you get to go back often at all?
Yes.
Okay.
Before COVID,
Yep.
I go back pretty often.
Yep.
And at the time, I still have quite a few customers in China.
Okay.
And I've got friends in China, so I catch up with them.
Yep.
But COVID changed a lot of things, right? Changed a person's lifestyles and everything. So COVID, pretty much, I didn't go back for 3 years.
Right. Okay.
And recently I still go back, but not that often. Probably 1 or twice a year.
Okay.
And just probably to visit friends.
Yeah.
And we also have the offshore office in China.
Oh,
So
do you?
that's
Okay.
why I travel there to visit the offshore office.
Yeah. Yeah. So that, I mean, once or twice a year, it's still fairly frequent, right? Compared to other people.
Uh,
No, I guess
well,
when you have a business there,
yeah.
it's not enough.
Yeah.
Yeah. So you studied here when you came here, did your tertiary stuff here? Or
Sorry?
as in when you came here,
Yeah.
you came here to basically study, right?
Yes.
Yeah. What did you end up studying?
Oh, you won't believe it. Information technology, IT.
IT.
Yes.
Okay. And how did you branch out into the finance space?
So I studied IT when I was in China.
Okay.
So in the first year of the uni, of course, I continue these majors when I come to Australia. So I studied 2.5 years in Australia to finish my undergraduate degree, the bachelor degree
Yep.
for IT. And after that, I think, maybe IT is not for me.
Right.
Okay, and at that time, it doesn't have many Chinese overseas students. So my whole class, I think only 2 Asian, me and the other girl is from Taiwan, and all others are either local or India.
Really?
Indian people is big in IT.
It is big. Yeah.
So I don't think I have any advantage in IT area. I don't have any advantage against them, and I don't think it's for me
And
at all.
is that the reason why you changed, or you just felt like,
I never tried IT after I graduated. I never tried to find any jobs in IT industry.
okay,
I only have the IT degree, and
Yeah.
that's all.
did you have a particular passion? I mean, did you go down the programming path or
Programming, yes.
programming path? Okay,
Yes.
what language? Remember?
Oh,
Do you remember? I know this is good.
C plus.
C plus, about C plus plus. Visual Basic.
Yes.
Yeah.
Are you in IT as well?
Well, I am. Yes, so I remember those languages.
Yes.
Wow. Okay, so that good. So from there, how did you get into the finance space? Like,
Uh,
was
you
it the
go-
first job that you just happened to land in?
it's pretty much the second job.
Okay.
So I used to work in a supply chain for the Target distribution,
Okay.
the Target shop. So to supply the government of some things.
Yep.
I worked there for about a year,
Okay.
and then I just quit, and just didn't feel too much challenge,
Right.
and
Okay.
I don't think that's something for me.
Yep.
However, when I start to work there, I bought my first house in 2000. I forgot, 2003
Yep.
or 4. I
Early
can't remember.
2000s,
Right,
yep.
yeah. So at that time, I go through the broker.
Okay.
So I feel, oh, that's interesting. But I didn't do anything. So after I quit the job, I have a bit rest. I didn't looking for a new job immediately. But one day I just tried the brokers.
Yep.
So at that time, actually, it's not broker. It's just like loan maintenance, inquiry things. I'm doing that for it's not broke firm, but it's like admin jobs for a couple of months only.
Okay.
Then I start to seriously looking for the banking, getting into banking industry. So at that time, I got introduced by Westpac, and I get into Westpac from there.
So when you went for that to get that loan for your house, you said you went through a broker. Was that I guess a broker who had access to multiple lenders, or okay.
Yeah.
It wasn't like a mortgage person at the branch or anything, right?
No,
Okay. Mortgage person. What do you call it?
that's called lender.
But what do you call the person at the branch who can help you with the loan?
Lending manager, the
Lending
banker,
manager,
the
that's it.
banker or the banker.
Okay. So you ended up having an admin job for a few months, couple of years, and then you decided, okay, I'm actually going to pursue this as a career, and landed in at Westpac?
Yes.
Okay. How was that
How was that?
in terms of experience wise?
Well, first of all, when I get into the bank, I'm pretty excited.
Yeah.
It's of course it's a big company, and yeah, as I said, at the time, not many overseas students, not many overseas people, not many Asians in the bank. So
Yeah.
all the meetings, everything, all the regional meetings, everything, I'm the only Asian. So yeah, I'm okay with it. And but when I get into Westpac, I'm not starting from the lending. It's from the currently they call personal banker. So they're doing the customer inquiry, open the accounts, all these things. Not doing the lending part.
Okay, so it's more of a service-based role,
Yeah,
not okay.
correct.
Okay,
I
initially.
don't have too much ambitions at the time.
Okay, because you're a young guy, right? And you're just sort of getting your foot in the door.
Yes.
Okay.
So at the time I was thinking, oh, that's my lifetime job. I'm not going to change anything.
Yeah, because it's a big corporation,
Yeah.
one of the top four.
Yeah, for someone like early 20s,
Yeah.
yeah, that's good enough.
Yeah, exactly. And you said it was more of an sort of an admin job at Westpac. And then how did that progress from there? Like, when did you become, interested in, the whole mortgages, lending, loans,
Yeah.
houses?
Yes. Okay. That's when I started with Westpac, I was assigned to countryside, actually,
Okay.
Whittlesea.
Whittlesea, yep.
Have you heard about Whittlesea?
I have heard of Whittlesea. I didn't realize that's considered countryside, but
I still metro.
okay.
So when Melbourne has locked down,
Yep.
Whittlesea also locked down. So it's the last town of the metro area.
Metro area. Okay.
So so at that time I live in Preston.
Yes.
So from Preston to Whittlesea is 30K,
Okay.
but it's only took like 25 minutes.
To drive, yeah.
Yeah, because there's no traffic, so there's no cars on that way. That's back to 20 years ago.
Okay.
Now the Plenty Road is full of traffic.
Yeah, it is.
The
isn't it?
Mernda and Epping, they all developed,
Yeah.
but at that time it's nothing. It's
Okay.
only on the road. It's only sheep and cows.
Yeah.
So I went there. I start from there, and because of my role, and in countryside, probably I only see one customer a day if you're lucky.
Really?
Yeah, sometimes no customer a day.
Okay.
So I feel bored. When I walk into that branch, I was surprised because that was old branch, old style. You know, all the banks, they have security glass, right?
Yeah.
So as a branch, had no security glass. So anyone can jump in.
Jeez.
The
Okay.
bench a bit higher,
Yeah.
but no
Yeah.
glasses, nothing at all. It's very old-fashioned.
Old-fashioned. Okay.
Yeah. And I was surprised, but on the other hand, that means it's pretty safe.
Yeah.
And so I'm at the back. Sometimes I feel too bored, so I just come out to help the teller to do some transactions.
Okay.
And I stay there for about half year, 6 months.
Yep.
I think, nah, I can't stay there anymore.
Because it's too boring.
It's too bored.
Yep.
There's nothing I can do.
Yep.
Then I just talked to the regional and tried to transfer out.
Okay. And at this point, you were still doing just everyday transactions, doing teller duties, still not in the mortgages area, right?
No, teller is not my duty.
Okay.
But-
But you were just helping.
because I have nothing to do.
Yeah.
That's why I helping the teller to do the transactions.
So, but in Whittlesea, were you, allocated there as a lender?
No,
Or
it's
no.
they don't have lender there.
Okay.
As the personal banker.
As a personal banker. Okay.
So teller is doing the transactions. Personal banker is open the bank accounts, do a bit inquiries, all these things.
Yeah. Upsell, cross sell.
Yeah,
Find out the situation.
Yes.
Okay. Yeah.
That's right.
Okay.
Yeah, but the good part is over there, that's no sales target. Well, there is sales target, but you never realize what is sales target
Yeah.
because it's so relaxed.
I'm hearing stories from various banks that the targets at the branches at the moment are very demanding. It's very stressful from what I'm hearing from, the tellers and personal bankers that I
Yep.
speak to in my private life. They said, yeah, it would be the branch life is,
It's changing.
It is
So
changing,
20
yeah.
years ago, the branch life is so easy.
yeah.
So no one take about the target. So I think the main focus from the bank point of view is customer service. Make customer happy.
Amazing.
Yeah.
Yes.
And well, target. What is target? I don't know. I don't even know what is my target.
Yeah.
Right. Until like I think probably 10, 15 years ago, and everything's changed.
Yeah, true. I mean, when you're getting one customer a day kind of thing, it's hard to do the target thing, right? Unless you're doing outbound calls or something. So you got bored at Whittlesea, and then what happened?
Then asked for the transfer.
Transfer.
Then I went to Eltham.
Okay.
So Eltham, I stayed in Eltham for a while, and it's much busier branch compared with Whittlesea, and much bigger.
Yeah.
Yeah. So as at Eltham, I'm still not touching anything about lending. Still doing the personal banking
Personal
stuff.
banking stuff. Okay.
So I stayed in Eltham for about a year,
Yep.
and after that I was. But when I work in Eltham, I also cover some branches like Greensboro, sometimes La Trobe University or something. And after a year, I was transferred to Preston.
Okay.
So that's the game changer.
Right. Why was it a game changer?
Because Preston has full of Asian,
Ah, okay.
right?
So you had an advantage automatically kind of thing.
Language.
Language. Yep.
Yes.
Okay.
So we have multiple personal bankers in Preston branch, and in front of my room is always queue
Really? Okay.
because of the language.
Yeah, yeah.
No one else can speak Chinese.
Yep.
So that makes me very busy, and at that time, targets become more important, but I never worry about my target.
Because you always smash it anyway, right?
Yes, correct.
Okay.
And also, at that time, it's Cross the Road. That's one of the major broker firm in Melbourne.
Okay.
Yeah, I won't mention the name, but they
Yeah.
are one of the majors. They're pretty much the largest broker firm.
Yep. I can imagine who it is. Yep.
Okay.
One of two comes to mind, but anyway, go on.
So yeah, I start because at that time, when broker doing the loans, all the loan documents is sent to the branch.
Okay.
So branch, the personal banker, we sign the loan documents with the customer and open the like offset account, do the credit cards, insurance, this kind of cross sales
Everything is done by the personal. Oh, sorry.
by personal banker,
by
which is
personal banker.
my role.
Yes.
So at that time, I know lots of their customers. I know lots of things about broker,
Right.
and I become friends of pretty much all the staff over there. They know me, and I become one of their friends.
So you sort of learned this by accident, like
Correct. Yes.
by helping. Okay.
Yes. So yeah, I know everything, and we work together pretty good.
Right. Amazing. So I didn't realize, I mean, when I think of Preston, for some reason, the Asian community doesn't come to mind as being big, but it's big enough for you to be quite busy at that, even 15, 20 years ago, you're saying, yeah?
Yes, I think Preston is still the same
Yeah.
as now,
Okay.
but yeah, still have a lot of Asian community in Preston,
Okay.
but it's different as Doncaster or Box Hill. Different. It's more tradies down there.
In Preston area.
Preston,
Yes, that's
yes.
what I think so as well. Yeah. Okay. So, and then what happened? You're dealing with customers on a daily basis.
Because there's a broker, so their customer is not just based in Preston. It's all around Melbourne.
I didn't get that. Sorry.
So I work in the Preston branch, right? So
Yep.
across the road is the broker firm.
Yep.
So they have their customer.
Okay.
So their customer need to sign the documents in Preston branch. So I get to know their customers.
I got it.
So their customer is not necessarily based in Preston.
Yes.
So yeah, I know lots of customers. I know lots of stories. I start to know everything.
Yeah. Okay. Okay. So
Yeah,
you get to know
start to get
their
interested.
circumstances and okay. All right.
Yes.
What works, what doesn't, and all of those. Just in terms of customer scenarios on how to get the lending. At this point in time, you're basically learning as much as you can, but not directly learning, but indirectly learning through by helping, right? As a personal banker.
Correct. I start to learn a lot of lendings because I need to sign all the loan documents with the clients.
Got it.
But at that time, I never think about being the broker.
Okay. Even at this point in time. Okay.
No, I was thinking about being the lending manager.
Okay.
So yeah, that's at that time.
Yep. And then what happened?
Then what happened? That's corporate, right? Corporate always has some politicians. So sometimes you need to, if you want to promote it, you want to guide higher, you need to protect yourself. So things happened, and to be honest, a lot of times when you're doing a role too well, it's hard for you to move.
I see what you're saying. Yeah.
So you need to fight for the movement, for the promotion.
Yep.
So that's what I did. So, and that's what I get at the end. So I get at the end, there's a lot of story between that, but at the end I got the lending manager role in Doncaster
Okay. All right.
after that.
But they basically wanted to keep you as a personal banker because you were being the medium or the conduit that was speaking to all of these, people from China and so forth, and you were making their job easier, right? You were basically getting the business, getting the mortgage brokers, the loan documents signed, so they didn't want to give you up, basically, right? That's what you're saying?
Yes,
Yeah.
at that time, correct.
Okay. Okay. So you ended up getting the lending role in Doncaster. Tell me about that.
Okay, that's another game changer.
Okay.
So because the role is different, the duty is different, and Doncaster and Preston is totally different area. So walking customer is different. But one thing is, a lot of times you need to be creative to be successful, to be outstanding from others. So at that time, people always thinking one thing is the bank and the broker are enemies. They are they doing the competitions, right?
Yep.
Especially for lending manager and the broker, because they're doing the same thing.
Yep.
So they can be enemy. But at the time I'm fighting, I told whoever it is, the regional manager or whatever, I said, we have a way to work together with the bank, with the broker as the lending manager. And we don't need to create the conflict of the channel conflict.
Yep. It doesn't need to be any friction.
Yes.
Okay. What was the solution that you sort of provided?
Well, so what happened is when I went to Doncaster, even I become the lending manager, those customers from the bulk firm, they follow me to Doncaster. They don't treat me as enemy. I still service them in other ways.
Got it. Okay.
Yeah. That's a lot of for example, is lending manager can do the top ups, right? So we can do the top ups, and the broker still benefit from the top ups. So we can work together in that way.
Win-win scenario. Yeah.
That's one of the scenario.
And you're right. When you find a good contact, that doesn't matter where they are, you are willing to travel for that person, right? So
Actually, they travel to there,
yeah, exactly. Okay. And then what happened
and
in terms
then
of
what happened?
your life in Doncaster?
My life in Doncaster is pretty easy.
Okay.
So it's nothing too much happened. It's relaxed and business as usual. But to be honest, at the time, Preston, they changed the management. They are not happy with what I did,
Which is working with the brokers.
which is their business is going to Doncaster now,
Ah, I
not
see.
going to Preston anymore.
I see. Okay. Which isn't really your fault. The customers
correct.
followed you.
I didn't proactively doing anything.
Yeah.
So yeah, a lot of times the trust is you need time to build a lot of trust.
Yeah.
And same as when you're doing the business, doing the broken business, customer trust takes time to build.
Absolutely.
All the relationship is the same.
Yeah. Yeah, true. True.
So yeah, that's Doncaster.
Then what happened after the Doncaster? So you've got customers coming from Preston. Now you're the lending manager.
Yeah, lending manager to cover. At that time, I'm the lending manager to cover Doncaster, Donvale, Doncaster East.
Yeah.
But all these two branches already closed. It's only Doncaster left. And
You've still got targets, but you're meeting the targets without any issues.
yeah,
Yeah, the portfolio is growing. So how do you move away from there? How long does that take for you to go, hey, maybe I should try, going to the broker side?
okay. So at that time, I already worked for Westpac for about six years. So at a particular time, I start to think. As I mentioned, at the early 20s when I get into the bank, I'm thinking that's my life career.
Yeah.
I mean, that's my life employer, Westpac.
Yes.
And after 6 years, I'm thinking, okay, if I continue to do that, what I will be after 20 years,
True.
right? So I seeing a lot of senior staff. Yeah, they still doing the routine things. I was thinking, is this the routines I really want to do for the rest of my life?
Yeah. And when
Or
you're asking this question, you're in your mid-30s?
yeah, how old is mine? Yeah, about early 30s.
Early 30s. Okay. Yes.
Early 30s.
Okay.
So yeah, so I'm just asking myself, you wanna be the routine, you wanna be relaxed, and you can see what you are in 20 years time.
Yeah, of course.
And you can think how you retired, or you want to have some challenge.
Yeah.
And to see if things can be changed. So, and when I think of that, so at that time I also get to know the business banker in which is my current business partner. We are the business partner for over a decade already.
Okay.
So we work together in the bank.
Yeah. What's the big difference between a lender and a business banker?
Lender is doing residential, business bank is doing commercial lending.
Commercial. That's simple as that.
Yes,
Simple.
that's very simple.
Okay.
So most as back then, so the branch has two lenders. So one is residential, one is commercial.
Okay. Yep.
So yeah, so yeah, we work together, and we during the lunch we first couple of probably first half year, we're only talking about bonus. how can we maximize the bonus? How can
Yes.
we do that? And after probably six months, we're seeking a bonus. Are we talking about this bonus for the next 20 years? Or should we get changed? So at the time we start to think about the changings. So yeah, we share the thoughts, we share the value, we share the views, and together, and basically we decide to move on together.
There you
So
go.
at the time,
So did you both quit at the same time, or
no, I quit first.
you quit first?
But
Okay.
well, yeah, I quit first only 3 months earlier.
Okay.
Yeah.
And then you ended up setting up the business, like, putting the registering the business name and all of that stuff, or did you buy into a brokerage company? I don't know how that works.
A lot of time is the opportunity comes without plan.
Okay.
So at the time when we think about this, there is one of the major developers in the CBD, and they come to us actually, and want us to help them to settle because they have three large settlement in 2 years time. So they want us to join their team to make those 3 projects settling.
Okay.
So that's total. That's more than 1,000 settlements.
That was more than
More than 1,000 settlements.
Okay.
It's high-rise buildings. So each building about 6 to 700 apartments, I believe.
Wow. Right.
So they want to have a team to experienced lender to work for them to make those settlements happen.
That's an amazing opportunity. So there's these developers, they're selling individual apartments. Not everyone has a lender or a broker that they can rely on. So they end up basically giving you, hey, we've got someone in-house. Why don't you speak to our man, Jeremy? Kind of.
They have their own broking firm,
Okay.
but they want someone to work for them. Their broking firm not perform well actually at that time, so they want someone to change it to make it works and to prepare for the settlements.
So did they ask you to join that firm, or was it a separate firm that you ended up setting up?
No, they want us to join the firm
Okay.
and work for them.
Okay.
And as I said, at the time we think about changing,
Yes.
but we think about changing is not changing the employee. We're not just quit Westpac and looking for a new job.
Yeah,
That's
correct.
not what we're thinking, right?
Absolutely.
So, but that's good opportunity.
Yeah.
Of course, at the time they request, they ask us to resign from Westpac and join them as an employee.
Yeah.
I said, well, we back to them saying, I can't see any point for me just to change the employee.
Yep. Doesn't make sense.
I'm pretty happy with Westpac. The only way I can think is for this change workforce is if we become partner. So I don't want your wages. I don't want to take any salary from you, but we share the profit.
Okay. So did you have this agreement with the mortgage arm of this company or the developers?
The developer is the owner of the mortgage company,
Right.
so it's the same person.
It's the same person. Okay.
So, but they are very reasonable, and it just took them like 24 hours to make decision. Yeah, okay, done. Let's talk about the percentage. Okay, so we end up with a partnership with them
Excellent.
for about 2 years until that all those
Development was
projects
done.
is done.
Okay.
Yes.
And then that obviously provided you with enough income to sustain your life and so forth. So after that development was done, what happened in your...
Now, a lot of as I say, a lot of things can't really plan because you never know when you quit the bank how many customers you have, how many business you have. So this is a very good platform for us in case that we don't have enough business.
Yeah.
But at the end, in reality, is after a few years, we realized is our own customer is more than their database.
Oh, okay. So while you were, helping this developer do their settlements, you've had something on the side as well, right?
We're doing their settlements and our customers simultaneously.
As well. Okay, got it. Side by side.
Yeah, side by side. So we have the mutual agreement.
Yeah.
And to do it together.
That's pretty
'cause
good.
It's broken firm anyway.
Yeah.
But after those settlement, we decide to have the in capital finance and until now.
Amazing. Amazing. So that's the transition. That's
a transaction.
Okay. Amazing. So how long has it been now?
For Link Capital?
Yeah.
Link Capital now this year is 11 years.
11 years. Okay. So that business you ended up having with your partner while you were working with the development company, and then slowly you transitioned out of there and then became full time with Link Capital, right? Running the business. Yeah. Okay. Amazing. So here we are today.
Yes, here we are.
Yeah, here we are today. All right. Awesome. Thank you for taking me on that journey, because I think that's really helpful in people who are watching this or listening to this, knowing who you are as a person. But I might just ask some generic questions about financing and stuff, if that's okay, right?
Yeah,
I know the climate has changed a lot now, and I'm hesitant to ask market updates, but I might save the market updates till the end. But just for anyone wanting to get into the property market, say they are married or have a partner, they don't have a house at the moment, they're renting, what are the steps that they need to take to get into their first home? In your experience, what are the steps that this couple, or you can give a scenario of an individual as well, what do they need to do?
Okay, now, to be honest, it's when the time, today's, some part of transaction is easier for first home buyers as of today.
Okay.
Because there's a government guarantees.
What's a government guarantee?
So government guarantee is for first home buyer, you only need 5% of the deposit.
Yep.
And the government provide guarantee to waive all your mortgage insurance.
Okay. So you don't have to pay LMI for between 80 and 95%.
Correct. So
Amazing.
that's very helpful for the first home buyer to have their first home.
When did this come into effect?
That's nearly 2 years, I think.
Oh, wow. Okay.
So where it started, it's only for Australian citizen,
okay.
not permanent resident.
All right.
But later on, I think after a year, it's expanded to the permanent resident.
Permanent resident. So if you're an Australian citizen or a permanent resident, you're eligible for the government guarantee. So this government guarantee, does the government pay the lender's mortgage insurance, or it's just waived or absorbed? Or do they basically just say, we take on the risk on behalf of the finance institution?
I don't think the government pay for the mortgage insurance, but they provide the guarantees.
They provide a guarantee. Okay. Available to all lenders?
No.
No. Okay.
So as I know, is for a start from only Commonwealth Bank.
Yes.
And Invaluable Bank at the very beginning.
Yep.
But now it's like CBA, NAB, Westpac, and some smaller bank as well.
Yep.
And ANZ is not doing it.
Okay.
Surprisingly.
So it's up to the individual financial institution if they want to participate in this program?
They must have agreement with the government.
With the government. Yeah. Okay, that's interesting. Okay, so it's not available to everyone. A handful of lenders are taking this opportunity to onboard.
But 3 major banks is enough.
Yeah, exactly.
Yeah,
that's enough.
That's great enough.
Yeah. So like his subsidiary companies like, Bank of Melbourne.
Bank of Melbourne is part of Westpac, so it's okay.
That's a yes. Yeah. St. George and all of those subsidiary companies are included. Okay, so you've got a bit to play with. So going back to the couple or the individual, as long as they save up the 5% and the closing costs, they're okay.
They're okay. Of course, there's some conditions.
What are the conditions?
One condition is the property price has the cap. So different area has different cap. In Melbourne, it's 750,
Okay.
and also the income has a cap. So if let's say if individual income, if your income need to be less than 100K a year to be qualified.
Individual.
Individual.
Okay.
So if your income is more than that, then you're not qualified.
You don't qualify for that. Okay. What about a couple? Do they have
Couple, I think it's 190 or 200, because those numbers keep changing every year.
Okay. All right. 100K isn't a big number when you think about it. I mean, I think we're all spoiled, but 100K isn't what it used to be, right? Because the cost of living has gone up and
Correct.
so forth.
100K is normal.
Yeah.
But one good thing is, a bit tricky thing is your current income, this year, when you buy property, your current income could be, for example, 200,000. However, when the assessment for this guarantee, they're looking at your last financial year taxable income.
That's it.
So even your current income 200, last financials note of assessment saying 99, then you still qualify.
So this is amazing. Okay. Are they eligible for a first homeowners grant as well? Do you know if that's still happening?
Yeah, they're still happening, but that's only for new home,
New homes, yeah. Or as in brand new homes.
brand new.
Okay. So that's a new thing as well. So it's if they're buying off the
Established.
plan,
Off the
plan
plan,
is
yes.
okay.
Yes,
Off the plan is okay, but not established.
correct.
Okay. This is available for homes, units,
Yeah,
any types,
apartments, any type.
any type. Okay.
Of course, not for commercial.
No, I know. I was gonna ask that, but then now, obviously, okay. First over is grant. In terms of the lending, you said it's 750. In terms of loan periods, 30 years. I'm assuming this is just standard stuff, right? 30 years, and can they go interest only?
No,
No, has to be principal and interest.
correct.
Okay. Cool. This is actually, I mean, I think it's good news for anyone wanting to enter the property market, right? So if they wanted to get them, can they use this to buy an investment?
No.
So if it's their first home, but they want to, rent their own house, but they want to buy it, they can't, it's not eligible.
No, not for investment purpose.
Okay, they have to live there basically for 6 months, 12 months?
I think it's 12 months.
12 months, okay. Which is pretty good, right? So you can still live for 12 months and then decide what you want to do it afterwards. In terms of people refinancing and getting into their second, third, fourth property, are you seeing a bit of restrictions at the moment with lenders? I mean, I know I'm trying to do a market update because I want to try and keep the content evergreen, but I think there's a portion of this podcast where we can do a sort of a market update. What are you seeing at the moment for, sort of seasoned investors in terms of refinancing and getting new lending?
Yeah. Now, I'm in banking industry nearly 20 years. And this 20 years, it goes through a lot of different challenge. And we see the property market was booming in the past 20 years. Currently, let's say using the equity to purchase investment property is still available, but the equity is not as much as in the past.
Because the valuations are coming in lower?
Because the property value increase is not that quick compared with the past.
Okay.
And also, in the past 18 months, we see the number of investors, especially in Victoria, has dropped dramatically.
Yeah.
I think everyone knows the reason.
I'm not surprised. Yes.
So the government, the State Revenue Office, and the Tenancy Act, a lot of things make landlord life very hard.
Very hard. I know.
So when there's no profit in the investment, then there's no investor.
Yeah, absolutely.
But there's a lot of investor go to other states.
Yep.
Queensland is the major one.
Queensland is a major one at the moment.
Yes.
Yeah. Are you seeing people sort of pull out of Perth and still focus? Because I know there was a back and forth with investors going from Queensland to WA, but are you seeing the transition sort of pull back now into Queensland?
Yes.
Okay.
So Queensland is started booming since COVID,
Okay.
because COVID changed everyone's lifestyle.
Yeah.
And since COVID, people can work remotely.
Mm.
So if I can work remotely, I can work in Queensland. Then my company is still in Melbourne,
Yeah.
and Queensland is much cheaper, and it's tropical season, not like Melbourne, right? We have raining today, and we need to have a jacket today and shorts tomorrow.
Yes.
Yeah, that's Melbourne. So they can get rid of those Melbourne weather and live in Queensland. Lower living cost
Yes. Yeah. Yeah.
and better lifestyle.
Yeah. True.
So that's what happened in the past, like I think it's 3 years.
Yeah, I'm seeing that as well. Though I have had one of my close friends, end up coming back saying, "Oh,
And I can see there's more and more people coming back.
yeah,
I can see one of the major reason is not the company, the government, the authorities start to encourage people to work from the office,
Yes.
not work from the home anymore. I think that's two couple of major reasons. One is since COVID, the offshore overseas position,
Yep.
it replaced a lot of local jobs. Because if you can work from Queensland,
yeah,
why not someone can work from Thailand,
yeah,
or Malaysia or Philippines?
yep,
So, and the other thing is, if everyone works from home, then the commercial property, especially in the CBD, will be struggling.
yeah, it is. I mean, I've seen this firsthand when you go walking around, say, 2 o'clock in the afternoon to go get a coffee, say in South Bank or whatever. A lot of shops close early, or they've got
Yeah.
all these signs.
Correct. Yeah. COVID is really hard time for CBD. The
Yeah,
business, the commercial, the landlord, or even residential apartments. At that time, the vacancy rate is so high.
yeah,
Because there's a time there's no overseas students, no tourists, and it's just a very hard time.
okay. Just in terms of your perspective, Jeremy, how do you see the Melbourne market changing or pulling back in from an investor point of view? Because at the moment, we've got the land tax,
Yeah.
we've got relative,
Tennessee Act.
yes,
Yeah.
Tennessee Act, which
Very
are,
strict Tennessee Act.
yep. So you're saying both of those have to sort of ease up for
Yeah.
the investors to come back?
Yes.
Okay.
I think government need to change something to bring the investor back.
Okay.
And probably that's the only way.
That's the only way. Yeah.
The other state doesn't have so much high land tax, higher stamp duty. Victoria has the highest stamp duty.
Yep.
And also the Tennessee Act is not as strict as Victoria.
Yeah, there you go. Yeah, I agree. I mean, I've experienced it firsthand. I'm going through it right now with, tenants giving issues and so forth. So it can be.
Yeah. So yeah, it's a hard time. Of course, it's hard decision for the state government as well.
Yeah.
Because they need funding for
Yeah.
For the state as well.
Yeah. In
But
fairness, though, I blame all the ridiculous spending that they did during the lockdown period. It's just unbelievable.
yeah, Melbourne is the world's longest lockdown city.
Yeah.
Yeah, everyday lockdown when government pay out
Yes.
huge amount of the monies. to
Yeah,
people.
yeah. Thanks to our beloved Premier. I remember that I was criticizing him back then, and I'm still criticizing him today. He's just completely messed it up to the point that I think we've got Victoria has got the largest debt, even when you compare that to combined of the other states, right? We've still got more debt than all the other states combined.
Yes. I think Victoria debts it's more than a lot of countries' debts.
Yeah, there you go. And sadly, the property investors are being punished for it, or they're trying to recoup some of that money from us. in terms of getting out of debt. In terms of generic questions, just to help, I suppose, the new investors out, what are your thoughts on negative gearing?
Negative gearing is the federal government. That's the ATO guidelines. Nothing to do with the state revenue office. And the federal government is keep talking about get rid of the negative gearing for years.
Yeah.
Still not happening. But I think it might happen in the future.
It might happen, yeah. So for anyone who doesn't know what negative gearing is, it's basically your outgoing costs are more than your
Rentals.
rental income, right?
Yes, the outgoing cost can be the interest, can be the land tax, a lot of things, or can be the virtual cost, which is depreciation.
Yeah.
So and to lower down your to lower your taxable income. So at the end you pay less tax.
Yeah. So effectively, what you're gambling is you're making a paper loss today, hoping that the property will increase by, X%, 5, 10 years down the track, and then you'll make the money back within the capital gain period, even though relatively short term you're making a loss in your pocket every year, at least a paper loss, right? That's the thinking behind it. That's the rationale behind all the accountants telling people who are making, the higher income, going, hey, why don't you buy an investment property and do negative gearing?
Yeah.
Did I get that correct?
Correct.
Yeah.
Negative gearing is really is beauty. Is one of the major attractions, especially for high income earners. So when people's tax rate is 48%, 46.5%.
Yes.
So negative gearing is very attractive.
Yeah. Unless they be creative and do other creative things such as put in trusts and so forth, but we'll keep that for another day. What are your views on people playing lender's mortgage insurance? Is it a case-by-case scenario? If the people have an option to buy an investment property, but they don't have the 20%, they may only have 5% or 10%, is it worthwhile? I know this is, it's not black and white, but what are your thoughts on it?
Now, from our customer base, of course, our sample size is quite small, cannot present the whole market. But from our customer database, we don't have too much of those customers.
Okay.
So for mortgage insurance, if customer paying mortgage insurance, majority is for owner-occupied.
Okay. And just to sort of backtrack a bit, explaining mortgage insurance for anyone listening who don't know is up to 80% of say you're buying a property and the property is worth $1 million. If you have $800,000 saved up plus the closing costs, you're okay. You can buy that property and the bank will lend you $800K. And so all you have to have is the $200,000 saved plus the roughly 5% closing cost, right?
Yeah.
But if you've only got $100,000 saved plus the closing cost, that means there's a 10% difference. So the bank will go, hey, we don't want to give you this much lending. Therefore, because it's putting the bank in a bit of risk there, we want you to pay a risk fee. And the risk fee is known as lender's mortgage insurance.
Correct. And remember one thing is mortgage insurance is not insurance for the borrower. That's the insurance for the lender.
Correct. Yes.
So borrower pay for it, but the interest party for the mortgage insurance is the lender.
Absolutely.
So when you pay for mortgage insurance, it doesn't mean when you cannot make the repayment, the insurance will pay for your repayment. It's not working that way.
It's not working.
So when you miss your payment, you are not able to make the payment happen, the mortgage insurance will pay the bank of their loss. And then the mortgage insurance company will come back to the borrower and still ask for your payment.
And that's a good explanation, Jeremy, because we've got financial institutions. Everyone knows who the big players are. Westpac, ANZ, CBA, NAB, and just to round it up, even Macquarie as well as the fifth big one, right?
From asset point of view, they are the second largest.
There you go. And not many people sort of realize that for some reason. But the lending mortgage companies are actually separate from them. They're separate insurance companies, basically, right?
Yeah.
Years ago, I actually thought that were part of the bank, but they're not part of the bank. They're a completely separate Entity.
Yes or no?
Okay.
So for certain percentage, so different bank has different policy. Some banks for like 90% or less, that's self-insured.
All right.
90 plus, go third-party insurance.
Oh, there you go. I didn't know that. Okay.
So of course, different bank has different policies.
Yeah.
Yeah.
But you can, yeah, up to 90% they are self-insured, yeah?
Some bank has 85, some bank has 90, I believe.
Okay.
So they do have small portion. The low risk portion is self-insured.
Good on you. Okay. So learn something today. That's awesome. In terms of, I mean, sticking on to the subject of lender's mortgage insurance, some people in society are eligible for going up to 90% without paying the lender's mortgage insurance, right? Can you explain who these people are?
Couple of category. One is we mentioned before, first home buyer with the government guarantee, they can go up to 95%
Yes.
to meet the other conditions. And a certain occupations is qualified for what we call professional package or medical policy. It's of course like the doctor, GP, dentist, or other health industry worker, including nurse in some banks.
Include nurses. Okay.
But for the nurse, only certain banks can do it, not all the banks. So they can do up to 90%.
Yep.
No mortgage insurance, but the bank still pay the mortgage insurance, but they pay for the customer.
Oh,
So
okay.
customer don't need to pay.
Right. Okay. I didn't know that. Yep.
And in some banks, the doctors can go up to 95%.
Okay.
And apart from the health sector, accountant, lawyer,
Engineers.
engineer, yes.
Okay.
But not IT engineer, it's civil engineer. They have the certificate of engineer.
Right. Okay.
Yeah, that's majority of the category. And also the banker, the major banks employee. Of course, if you are the banker, if you are bank staff, you go with your own bank. You can always get those waived, no problem. But if you work in 4 majors plus Macquarie, even you go to other banks, we talk about majors, they can still waive the mortgage insurance for you.
Up to 90%.
Up
Some
to
even
90%.
okay. All
Yeah,
right.
give me an example. Is you're working for ANZ, even you're IT manager or something.
Yeah.
As long as your pay slip is from ANZ, and then you go to CBA to do the finance, you're qualified to borrow up to 90% without mortgage insurance.
Yeah, that's awesome. That's actually really good for sort of, I mean, I know not everyone's working in the bank, but if you are working in a bank, they probably know this already, but maybe they don't.
Yes,
Yeah.
but those policies basic only works for it's only in major banks.
Okay.
Smaller bank doesn't have those.
Yep. Awesome. And just in terms of, I mean, it's again, we've already established that Melbourne, from an investment point of view, isn't the best at the moment. But if someone made you pick a suburb or 2 or 3 in regards to capital growth potential, have you seen any hotspots?
Oh, that's a very hard question.
It's a hard question, I know.
It's really hard to say. Right?
Okay.
And you can only consider the historical data.
Yeah.
But if even one suburb, let's say Bowen, for example. So Bowen price pretty much not increased in the past 3 years at all, or maybe even 5, not have major increase. But back to 10, 15 years ago, the price increase could be like 20% a year.
There you go.
So it's hard to say.
It's hard to say. Yeah.
It's really hard to say. But some suburb has probably risk these days. Example is from 1st of April, which is a week later. There's a new legislations for temporary visa holders. So currently, temporary visa holder can purchase one established property for occupied purpose. But once they leave Australia, they have to sell it within 90 days.
Okay.
Or if they grant permanent resident, they can keep it forever.
Right. What type of visa holders? When you say temporary,
visa?
like you're talking about student visas and working visas.
Any visa apart from tourist visa.
Okay.
So
they
any
can
other visa.
purchase. All right. I didn't know that. That's.
You don't need to know because this will finish from 1st of April.
Oh, okay. So it's finishing soon.
Yeah.
Okay. In terms of commercial lending, are you seeing an increase in that? What do you feel like at the moment in terms of commercial lending coming through?
Okay, we doing a lot of commercial lendings.
Okay.
And commercial lending, I think you're talking about commercial investment.
Commercial investment, yeah. And
Buying
what's the
commercial
maybe
property.
explain the criteria as well in terms of the loan to value ratio that someone could get, office space compared to a warehouse to a larger.
Yeah.
Yeah.
Commercial property, commercial investment, it is different as residential. It's different knowledge, different theory, and more and more people in Victoria is doing commercial investing rather than residential.
But are they doing it in Victoria or they're going interstate?
Both.
Okay.
Because the Tenancy Act does not affect
Doesn't
the
apply.
commercial.
Yes.
So compare with residential and commercial, if you really want to compare, is as landlord for residential. If tenant has the water leak, the air condition doesn't work, it's all landlord's obligations, right? You need to fix things, you need to do everything. And then you need to pay for the water service fee,
Yeah.
body corporate, council rates, land tax, all these kind of things, all the costs.
Yeah.
A lot of headache. Commercial, it's all tenants' liability.
Yeah.
So you don't need to worry about anything. Water leak, you fix by yourself. And in some commercial property, the landlord only need to pay for land tax. But in some, even the land tax is payable by the tenant.
So in and this obviously changes from lease to lease and so forth, but generally they take care of the physical structure, the structural structure of the building and the roof.
Oh, pretty much the tenant take care of everything.
Everything, okay.
As long as the building not collapse.
Yeah. Okay. Yes.
So, but the risk side is commercial lease is always long. Residential, 1 year. Right. But however, in residential, it's very easy to replace the tenant. Commercial is the other side. The lease is very long. It could be 15 years, 20 years with options. However, to replace tenant, it's hard job.
Yeah. It could be vacant for 6 months, 12 months, maybe even longer.
Years, yeah. You need to consider that. But however, in lending, it's also different. Residential is covered by regulator, covered by ASIC. So the bank need to do responsible lending, need to verify your income, your liability, your living expenses, everything. Commercial doesn't apply. So commercial, as long as there's a lease in place, you don't need to show any income. You can just borrow normally 50 to 60% of the value.
Yep.
And your contribution could be like 40 to 50%.
Right. And that's the downside, right? So whoever's
Yes.
Yes.
Contribution is more.
Yeah. Contribution is a lot more. So if you're buying $1 million commercial property,
That's only if you don't want to show income, if you don't want to go through the hard process.
okay.
However, if you have plenty of the surplus of your income, you can still go through the same way as residential to borrow. A lot of lender can still do up to 80%.
Up to 80%. Okay. It's pretty good, right? Like that's reasonable, but you have to go through a full doc loan basically.
Full doc loan.
Okay. All right.
And a lot of people thinking commercial, the interest rate, commercial is higher than residential. These days, not really.
Okay.
We can see a lot of a commercial investment, the rate is cheaper than residential investment.
That's interesting. Okay, very interesting. In terms of lenders that are out there, are we talking about the majors or commercial?
Commercial depends on different category of the commercial, depends on the nature of the properties.
Okay.
So different bank has different policy. For example, childcare is high risk for this lender, but the other lender may be okay.
Yep.
And yeah, it's really case by case.
Case by case. Okay, nice. Do you do any business lending?
In what kind of business lending you're talking about?
So, you know, if I was to go out and buy a business, a franchise, would that be something that you could help with?
Yes, there's multiple ways to do business lending. If when you mention the franchise, so the bank has a list of franchise. So certain franchise can be used as security.
Okay.
Example is 7-Eleven, Australian Post. So, for example, you purchase 7-Eleven for $1 million, then the bank can lend up to like 65 to 70%, depends on the size.
Yeah.
And serviceability based on the vendor's finance. If it's not franchised, you buy in the business, there's a couple of ways. One way is you provide security. You provide your home if there's enough equity there.
Yeah.
As additional security to release that to using that security, release the fund to purchase the business. That's one way.
But they can do it without cross-collateralizing the assets?
That's only in that case. That's only one asset we're talking about. The business without franchise, there's no assets.
It's not an asset
It's not the assets.
because you're essentially buying the goodwill or the name.
Correct.
That's it.
That's
Not.
it.
Oh, you're right,
That's
because there's
not
no
the
building.
security.
Right. Okay. Good point.
So that's not considered security. So the only security is your home, is your
Okay.
property or your investment property.
Okay, makes sense.
So that's one way. And the other way is called unsecured lending. So don't need to provide any security.
Yeah.
I think the maximum can go is like $500,000 for unsecured lending.
That's okay.
Of course, unsecured lending has higher risk. The rate is higher
Right.
compared with the secure lending.
Okay.
And but some special industry, for example, accountant, they buy in the books. This can be used as security. Can do the lending.
The actual database of
Yes,
clients.
correct.
Ah, that's interesting
And the rental book.
as well. Okay. Very interesting. What about vehicle finance?
Vehicle finance. We start to do more and more vehicle finance.
Okay.
So vehicle finance it could be very, very simple. These days, basically, it's like if you have ABM for more than 2 years and you own the house, pretty much you don't need any financials to borrow up to 150,000 for vehicle, 250,000 for earth moving
Equipment?
equipment like
Yeah.
excavator
Yeah.
or trucks, and yeah, pretty much no income required.
That's amazing. Okay, I didn't realize it was that simple. So the vehicle has to be under a certain age, or does it have to be brand new?
Again, different lender has different requirement.
Okay.
So if you want to have the lower cost of the lender, then 4 years of 4 year of old, no more than 4 years old of the vehicle. It can be secondhand, can be brand new. It
Doesn't matter as long as it's,
Yeah.
not older than 4 years.
Yeah.
All right.
As long as it's not performance car,
Is there an
it's
issue
not
with performance?
Ferrari or something.
Yeah.
Yeah.
But what happens if it is a performance car that's
Then-
under 150K?
Then okay, those is for fast track, no income required. But of course, if you want to buy Ferrari, if you want to buy something more than 250,
Yeah.
of course you can still do it, but full assessment.
Okay. Got it. You seeing a demand with the electric vehicles, EVs at the moment? Like, is there, how can I put it? Is there a luxury car tax, or are you finding is it the same in terms of getting finance?
Finance point of view is the same. Yeah,
It's the same.
Some lender has green loans, but majority doesn't.
Yeah. What's a green loan?
Green loan is for like electricity, cars.
Ah.
So they got green energy.
Okay.
Yeah. So, but these days we do more and more electricity cars for finance.
Finance. Okay.
Yeah, last week I think we have at least 2 EVs.
EV cars. Okay. Amazing. I probably won't go into the brands, but that's all good. We've covered a lot of any other financing that you do, Jeremy?
Oh, good question. That's actually lots of different finance like working capitals.
What's a working capital? Oh, as in just to sort of cash flow?
Yes,
Okay.
that's right. Cash flow.
For businesses.
Yes, for business. Invoice finance.
What's an invoice finance?
Invoice finance, for example, is you're running a. Give you a good example. You're running a. Not restaurant, but okay. For example, you supply food to different restaurants, right? So every restaurant has like the credit term, 30 days, 60 days, right? So you give them the food, you give them the goods, but you didn't get paid until 2 months later.
Yeah.
So you can give this invoice to the bank. The bank will lend against those invoice. So basically, sell the invoice to the bank.
Right. Okay.
So the bank will chase after for the payment.
Interesting. Okay.
Okay, so that's invoice finance. Of course, you need to have multiple customers, not
Yeah.
just one customer.
Oh, no, on customers. Okay. That's interesting. Okay. Are you finding that the lending conditions have changed for people who are self-employed, ABN versus ACN versus trust? Can you go into those at all? Are you seeing this landscape has changed a bit, or is it pretty much the same?
No, first of all, majority of the clients are self-employed.
Majority are self-employed.
Yes.
Oh, I didn't expect that. Okay.
And yeah, we have some junior brokers to do a lot of POIG customers.
Because they're easy.
Yeah,
As in straightforward.
Yes, straightforward.
Okay.
So yeah, my customer base, we doing, I can say more than 90% are self-employed.
Okay.
And those structure we're seeing every day. So company, majority is company, trust, bucket company.
Bucket company meaning there's no money going through it. It's just like a shell company. Is that what a bucket company?
It is.
Yeah.
So if you have the trust, so the trust cannot retain any profit.
Yes.
So the trust income need to be distributed
Yep.
to entity. So this entity could be individual, or could be other company or other trust.
Okay.
But if let's say this company, this trust makes $1 million of the income, and if there's only 2 individuals, you and your wife, then 500,000 each, then your income tax is too high.
Got it.
Right.
Yes.
So at the time they will choose to establish a bucket company.
Yeah.
This company is it's a shell company doing nothing. You don't need to have the ABN because there's no trading. So this company is only to distribute income to to lower down the tax rate, because the company tax rate currently is 27%.
Okay.
Compared with individual could go up to 46.5%.
Okay. That makes sense.
So that's the bucket companies.
Right. Is this, you said about 90% of, your borrowers or people who come to you are self-employed. Is that normal? Like in terms of the landscape? Like, for example, if I speak to another broker, would that ratio be the same or not really?
No.
Okay. You specialize in this sort of demographic.
Correct.
Right.
I think on the market, majority of brokers are still doing the POIG.
PAYG. Yeah.
That's the majority. And self-employed is not. it's not easy. It's
Yeah.
a lot of headache. Like there's one financial on my desk now. The customer has 34 entities. Yeah, 34 entities. So we need to analyze every individual entities, and to get the cash flows, the income flows, and to basically we need to analyze everything, educate the not educate but show the bank how the incomes goes and tell them how to how to get those incomes result.
Right.
And a lot of times self-employed doing self-employed, like doing the court case, you're the lawyer.
Yeah.
So
You're putting the case together.
correct. So different people may have different thinking, different way to analyze those figures. So you may, for the same documents, you may come out with this figure, but I may come out with the other, because a lot of things can be argued, can be negotiated.
Yeah, yeah. I remember, I mean, I remember when you got my loans approved, exceptions after exception, because especially when I had set up the business back then. So I appreciate you fighting for me
Yeah,
and putting my case together.
at that time we call miracle, right?
Yeah, it was a miracle, because I remember that point. I had the real estate agent calling me going, "There's no way, OP. What are you, you're not gonna." I'm like, don't worry about it, Jeremy. We'll get it, over the line. And then, when you ended up getting it approved, she's going, "Oh my goodness, this has never happened." So so she was blown away when you got that loan approved. So thanks for that. But another thing I wanted to ask you was, what's the minimum requirement? So if say someone's got a business that they've set up, it's GST registered, it's they've got an ACN, obviously. What's the minimum requirement that they need? Is there a certain amount of cash flow that that needs to be going through this entity, or minimum term that they needed to have held it for?
For the bank to accept
Correct.
their income, is it?
Correct.
Okay, policy says ABM more than 2 years.
Yeah.
And ABM more than 2 full financial years, not calendar years.
Okay.
And provide 2 years tax return, 2 years financials.
Yeah.
But as I say, that's policy. A lot of things is case by case, and more than 70% of our cases, we need to ask for exceptions from the credit.
And what does that mean? Just for sort of someone who's listening to this, when you say you as a broker get an exemption for the client, you're basically putting together a case going, hey, even though this client of mine doesn't fit your box exactly correct, this is why they can still make the repayment. You're basically fighting for the individual person.
Yep. I'll give you some simple example.
Yeah.
So you work for ANZ as the IT manager, IT consultant, whatever, and then you start to have your own business in IT, right? And your own business only lasts for like 8 months,
Right.
and you have the interim financials provided. Of course, based on policy, you are not qualified.
Yeah.
Your
because of
income is
only-
not accepted. It's only 8 months.
Yes.
But we can argue is you are in the same industry for 10 years. And so whatever you did when you are in the bank is similar as what you did now.
Yeah.
And we can show who is your customer base, and we can show the last 8 months history, which is consistent of when you're doing the POIG.
Yeah.
So those kind of exceptions we are seeking.
Yeah, yeah. I remember you saying this because as long as you're in the same line of work, it's you can argue it's okay if you sort of change jobs and change companies, as long as your line of work is the same. You as a broker can fight on behalf of the client. Yeah.
Yes,
Yeah,
correct.
okay.
And sometimes is the cost as well. For example, you do provide 2 years tax returns, but first year is pretty bad because the business just started. That's like $500,000 of the setup cost.
Yes.
We can argue saying that $500,000 setup cost is not ongoing. That's only happened once,
Yeah.
right? And it's a lot of different. I can't say I wouldn't say story, but a lot of different credit argument to persuade credit to accept the exceptions.
Yeah.
Yeah.
So
So
it's a lot of back and forth, and I mean, you've got good relationship with all of these lenders now, right?
because in the majors, we are in some second tier, so we are the premium or platinum brokers. So we have dedicated credit manager.
Is that what a platinum broker is? Because I've heard this term before, platinum broker.
Different bank has different name.
Okay.
So Westpac called platinum,
Yeah.
NAB called premium,
Okay.
and CBA has another name.
And all that means is that you put so much business through to them that they just give you priority service kind of thing. Is
Correct.
that right?
Yes.
Okay. Thanks for that. Thanks for explaining all of that. In terms of genuine savings, is that still important?
It's still important if you want to borrow more than 90%.
More than 90%?
Yeah. But if it's less than 90%, most time it's not required.
Okay. All right. That's good to know. But if someone's getting a, first home or something like that, and then, I guess that answers that question. If they're getting more than 90% loan to value ratio, they need to have that savings, right? For how long?
Genuine saving for 6 months.
6 months.
Something like that, 3 months. But
Okay.
it's only 5% of the purchase price.
Yeah.
Should be easy. Or even you can use in your rental history.
Oh, you can use the rental history.
Yes. So as long as you can provide 12 months, they call rental legend from the real estate agent.
Yep.
Yeah, it's still fine.
And they sort of count that as genuine savings.
Yeah.
That's interesting. Okay. That's actually really good. So as long as you've got the cash somehow,
Yes.
right? Whether it was a gift from a family member or something like that, or no?
For genuine saving,
Yeah.
even the parents' gift,
Yep.
some banks is recognized as genuine savings.
Ah,
So it's pretty simple for some lenders.
yes, to tick that box.
Yeah.
Okay.
Well, I never see any applications fail for genuine saving criteria.
Okay. Awesome.
But on the other hand, we don't have too many of those applications.
Right.
As I say, majority is self-employed. We don't do too many mortgage insurance.
There you go. Yeah. Okay, that makes sense. What about having unsecured lending, credit cards? Because I don't know if you remember this story, but initially when I was doing the refinance and buying a property, you called me up and you said, "Hey, OP, you've got $120,000 worth of unsecured lending." I had like a bunch of credit cards. None of them were used. I think one of them I was using, but I was paying that off every month. But I just sort of kept it open as an emergency. I knew it was going to hit me. And eventually I closed them off. But what's the situation at the moment? What are you seeing?
It's still the same.
It's still the same. Nothing's
Still the
changed.
same. So I won't be surprised if that customer doesn't aware that they have this credit card.
Yeah.
It's nearly happened more than 50% chances.
Yeah.
So some customers, they don't know there is a credit card there.
Yeah. So even if they're paying it off every month, it still impacts their borrowing capacity.
Yes, correct.
Okay.
So the bank will take the limit, not the balance.
Okay. So if, hypothetically, they've got $20,000 limit, that's going to impact their
Mortgage. So
amount of borrow.
about 5 times. So every, let's say 10,000 of the credit card probably will reduce your 50,000 of the borrowing capacity.
That's
in
actually a
mortgage.
good ratio, actually. I
roughly.
thought it was more, but that's pretty, okay.
Yeah, it's roughly.
Roughly about that much. What about this new trend that we're sort of seeing, like the quick money ones, like Afterpay, Zip Money, all of these things? Are you seeing people use that a lot? Maybe not your clientele because they're, I guess, self-employed. They're in a different category. But are you seeing that trend a lot, and is that impacting people's borrowing capacity?
When we do first home buyer or young young applicants.
Yes.
I think majority of them, their credit file has those things.
Yes.
They call buy first, pay later.
Yeah. Yeah.
It was hard in the past when those things are just introduced to the market.
Okay.
But now the lender is much easier, so it won't have huge impact.
Okay. So the lenders have become sort of accustomed to this showing up on the credit files, yeah?
So some lenders they don't care, so they don't need to including this as liability.
Yeah.
So some lender just treat them as like credit card.
Okay. I see what you're saying.
But in the past, it's very harsh, very hard. In the past, they treat this as actual repayment. Think about that. I'm buying a air condition. It's 4 installment.
Yep.
All right, so $250 a month for 4 months.
Yep.
But total is only 1,000. But my liability become $250 per month if I have this.
So they take that into the expense column and then okay.
So that's in the past.
That's in the
I
past.
don't think that's anymore.
Okay.
So in the past, we have to tell the customer, oh, unless your serviceability is very strong, otherwise, you just pay that $1,000 to increase your borrowing capacity by like 20, 30,
Yeah.
or
Okay.
even more.
Interesting. That's actually good to know that trend has, I guess, changed. I mean, I still don't recommend people use that anyway, right? Because if you can't afford it, try not to buy it. But that's a different topic. How are you, Jeremy, dealing with bad credit files or credit files that are not ideal? And in Australia, I mean, Equifax has come through and they've got a number now, whether it's 500, 600, 1,000, whatever. Do the lenders take into that number yet or not yet?
Yes.
They are taking that number into account.
The bank, especially for the majors, they have credit score system.
Okay.
So it's all AI automatically. So when you see some applications, when we submit, it did decline in 1 second. So it's called auto declined. Of course, when it's auto declined, it will be manually referred. But majority of the time is because of credit score fail.
Right. Because the credit score is too low, or they've got a black mark against their name? What's the
Both. So if you have default or mispayment, of course your credit score will be very low. And those decline is automatically. And when they fail credit score, majority of time, the bank will not accept. Majority. But we have some cases, at the end, the bank accepted it.
Yeah.
But for some customer, even you don't have any credit default, your score could be still low.
Why is that?
Credit inquiries.
Too many credit inquiries.
Too many credit inquiries.
Can you give me some examples of?
Okay. Young people, they want to buy the first home. They worry about if I can get the money. Then they go to 5 different banks to do pre-approvals. In 2 months' time, they hit like 7, 8 inquiries. So, and all the banks give them the pre-approval.
Yeah.
No problem, because at that time, when they apply for the pre-approval, at the time they run the credit check, the score is pretty high.
Yes. But when they come to you, or
when they purchase the property,
yep.
and they want to turn the pre-approval to formal, at that time, the banks declined.
Yeah.
Because credit score failed.
This is a huge one, and I think not many people know. As soon as you do, approvals, and it's like they basically go around shopping for the best bargain in terms of interest rates, conditions. But every time that they get approval, you're right.
Yeah, and not only for the mortgage, also the credit card. Also
credit cards as well.
There's a lot of credit card promotion.
Yeah.
So that's 100,000 of the contest point.
Yes.
This, that. So a lot of people they just apply the credit card for those promotion. They may not using it. Absolutely. They may close it. But in short period, they have 10 inquiries on credit cards.
Yes.
And this is a huge impact on the credit score.
Yeah, there you go. Okay.
However, only major banks has credit score system. So if this failed, if there's no default, it's only fail credit score, we can still go to the smaller bank who doesn't have the credit score system, can still get through.
At the moment.
At the moment,
At
yes.
the moment, yeah. But this may change in the future.
It may change.
It may
When the
change.
open bank, when everything is automatic, when AI is introduced, everything could be happened.
So for anyone listening, just make sure you don't shop around for the best pre-approval. Don't shop around for credit cards. Don't shop around for telecommunication. Like
Telecommunication is fine.
Telecommunication is fine. Okay. That's interesting, actually. Unless they do a default.
Correct.
Yes. Okay. Cool. This is good. Yeah, this is actually great info. Anything else that I mean, we've got a lot of topics here, but anything else that you think we haven't sort of covered or that you wanted to share? Do you have some interesting stories that, where you thought, there's no way that we're going to get this approved, but you ended up...
Oh, that's...
There's so many, right?
Yeah, that's a lot.
It's a lot.
That's
okay.
a lot. But one thing I probably want to mention, which a lot of people, when they are not familiar with the industry, all the new brokers, when they start or just start a job, when I do the interviews with the new brokers or when doing the training, I always ask them, okay, what do you think to the customer if they come to you? What do you think it's important for them for the mortgage? I think 9 of the 10, the answer will be interest rate.
That's what the brokers say.
That's probably the customer and the new broker says.
Okay.
So, and they a lot of people thinking the benefit of broker is to compare the interest rate.
Okay.
I don't believe so.
I don't believe so either. But you continue.
But I think a lot of people has this thinking.
Yeah.
Not only the new broker but also the customers.
Interesting.
So, as the customer, of course, if everything's made the tick, your borrowing capacity is very, very strong, and your LVI is very, very low, of course, we need to fight for the best rate.
Yes.
But those cases, it's not that many.
Yeah, true.
Okay. I can see majority of people want to borrow the maximum. So borrow the maximum, from our experiences, is much more important than the interest rate. But someone, they want to borrow maximum and they also want to have the lowest interest rate. And a lot of times you can't have both.
You can't have both, yeah. And you're right, the way and you can correct me if I'm wrong, the difference between going to a broker as opposed to going to the lender directly is you've got the broker fighting for you, putting the case together, like as you said, like a lawyer, giving you the best terms.
Yeah.
And the terms could mean a whole lot of things, right? Not just the interest rate. That's just one piece of the puzzle. Did I get that right?
Yes. Well, I think the value of the broker is more than that.
Okay.
Now I'll continue with my topic
Yes,
before,
yes.
right? So I tell the new broker is you cannot assume what the customer needs are. You can't, when the customer in front of you, you can't assume, you just want to have the lowest interest rate. So everyone is different. Someone want to majority probably want to maximize their borrowing capacity,
Yes.
but someone want to have separate loans for different owner. We call property share.
Okay.
Or someone they don't want to borrow extra. They just want to have enough, and they want to pay extra, and they want to reduce their loan limit every month.
Yep.
So every individual is different.
Different.
You need to understand, but their interest rate maybe not the very important. Back to the broker against the bank.
Yep.
Obviously, we have access to all the lenders, and the banker only have access to one lender.
Yeah, and that's a huge one, right? Which people don't sort of, they think, hey, I've been with
That
this
yeah,
bank for, since I was 14 years old, and I've got savings with them, whatever.
that's a huge one.
Yep.
However, I got someone to challenge me, especially young people. I can do my own research on internet to get product features, to get interest rate, and I go to that particular lender that I can choose from.
So
I wanna choose.
that's the counter argument that they're saying, instead of going to a broker, they're saying that they can do the research online by themselves.
Yeah,
Okay.
correct. So yes, that's right, but that's only applicable for simple scenario, simple
Right.
applications.
Yes.
And also for the major banks, you will not find their interest rate online, because their online interest rate is just a standard rate. And most, nearly 100% of the times, we have special pricing to lower the rate. Of course, when you go to the bank, the lending manager will do the same for you.
Yep.
But you will not know what's the rate until you walk in.
You could, yeah. So what you're saying is, if you fit the box perfectly, you've got a PAYG income, you've got genuine savings, you've been in a stable profession for a long time, and you've ticked all the boxes without any exceptions.
Yeah.
You theoretically can make sense going to whatever lender you want.
Yes, and you can go to some online lenders.
Okay.
Those online lenders doesn't have broker channel. We can't do it.
Can't do it.
And they don't have the branch,
Yep.
and there's no lending manager to do it. We just apply online by ourselves.
So would you recommend that if someone fits the box and they're going for their first home, would you recommend these online lenders?
Yeah, if you tick all the box, and if your scenario is simple, go for it.
Go for it.
They are cheap,
Okay, they are cheap.
but they are cheap for reasons.
Right.
So they don't have branch, they don't have service. If you want to make any variation in the future, it's hard. But if you just want to have a simple home loans and your scenario is simple, nothing wrong with them. Nothing wrong with it.
Okay.
But those lender or those product has a very small portion in the market,
Yeah, I see what you're saying.
and you can tell why.
Mm.
So from my point of view, the difference between the broker and the banker, I think, which I always tell my customers, we are not just doing one transaction for you. We help you to create your property portfolio or your investment portfolio. If you're just buying one property and come to us, probably we don't have too much value for you.
Yes.
We can still do the job, no problem.
Yeah,
But we're probably the same as the banker and others.
I see.
But if you continue to buy down the track, so we have so many customers, including you, that we work together for 10 years, 20 years.
Yeah.
Right? So if down the track, if you continue to buy, we can always help you, and we can always, we know all your stories, and we can, when we're doing loan one, we can prepare for loan two. We can tell you what to prepare, tell you how to save, tell you how to get the, release the equity, all these things.
Yeah.
And the structure as
And
well.
the structure as well.
So, but if you go to the bank, do one loan, yes. When you do the second loan, do you think you can find the same banker?
It's not going to happen.
Yeah.
Maybe if they've been there for a long, long time. But yeah.
Yeah, you're doing it. Maybe 3 years later, you come to me, I'm still here.
Yeah.
10 years later, you come to me, I'm still here. But 3 years later, you go to the same branch, if we find the same lender, then it will be the question. Because for the lender, for the banker, if you're doing well in this position, that's end of two ways. One way is you get promoted. Right, you move on.
I see.
So you're not in that branch anymore.
Yeah.
Or you go out, like become broker, become financial planner or something, and you're not in the bank anymore. And So if you stuck with in the same bank, in the same branch, I don't know if you can put too much trust on it.
Yeah, yeah.
So
Okay.
but
that
that's a
makes sense.
reality.
That is a reality. Yeah, you're absolutely right. You mentioned sort of the accountants before. How important are the accountants to your clients in terms of the part that they play?
Accountants now, because we majority of our clients are self-employed, so we work with accountants every day.
Yes.
Accountants are very important
Mm.
because customer is good in business, but they are not good in tax.
Yes.
Accountant. So a lot of time when you ask customer, show me the tax return, show me the interim financial BAS or whatever, they have no idea what you're talking about.
Yeah.
Okay, give me your accountant details. I talk to them. So accountant is very important. We work very close
Yeah.
with the accountant.
How do you feel about people who sort of do their own taxes, lodge all of that stuff? As long as they know what they're doing, you're okay with that? Or would you recommend they still get a qualified accountant to help them put a strategy in place?
If you're a sole trader
Yeah.
or if you only have one entity, nothing wrong for you to do your own tax returns. Nothing wrong. But if you have multiple, it's better to use that time to develop develop your business rather than saving the accountant service fee.
Yeah. I agree. I agree.
So when we're doing the finance, you're right. If someone is self-employed doesn't have accountant, not many cases, but sometimes they do. So we find is that first of all the tax return format is different.
Yeah.
You need to download from the MyGov, and those format we are not really familiar with. And we need to find the figures is a bit hard to find, and also they don't have access to financial report.
All right.
Because accountant doing the financial report.
Correct. There's no interim financials or anything
Yeah,
like
of
that.
course,
Yeah.
there's no interim financial, and they don't use a zero or MLB. It's a bit hard.
Yeah. Yeah. So for anyone listening, if you're serious about building wealth, buying multiple properties and doing this properly, speak to a proper qualified accountant. And just to share a small story, not all accountants are created equally, just like all mortgage brokers aren't created equally. So when I ended up going down the path of so I had this one particular accountant for a long time, and I was talking to him about trusts and setting up companies, and he just goes, "What are you worried about? Don't worry about it." And I said this to him a couple of times, and his response was, and he would always give me a good tax return. But whenever I spoke to him about structures, I was not interested at all. And I thought, time to shop around, time to shop around. And by that time, my income had sort of jumped up as well, to the point where I needed to make sure that I structure myself, because otherwise I was going to be paying ridiculous amount of taxes.
Yeah.
So I had done my own research and figured out, okay, this is where I need to structure it to better maximize my situation. I ended up sitting down and having a chat with about 5 accountants, believe it or not. And two of them said, "Oh, can't help you because that's not what I specialize." 2 of them said, "OP, I see what you've done there. I see your diagram. It's correct, but what you're trying to do is minimize the amount of tax you're paying, so I can't help you." I'm going, of course, that's what I'm trying to do. I'm trying to minimize, and obviously legally, paying the amount of tax that I need to pay, but not donating tax to the ATO.
Yes.
So anyway, ended up ringing a few people around, but I ended up ringing a few entrepreneurs. Right, a couple of entrepreneurs. They all pointed me to the same person.
Yeah.
Spoke to them, and I go, "Hey, Mark, this is my situation. What do you think?" And he goes, "Yep, that's exactly it, Opie. Let's do it." And then obviously he gave me a few ideas, and that's how I ended up getting my accountant. So the point of that story was, for anyone listening to this, shop around, do your own research. Often you have to sort of try and educate the accountant as well sometimes, but you should be able to find a good accountant who can help you grow because they've
Yes.
got other clients who are bigger than you
Yep.
that you can learn from, right?
Correct.
Yeah.
Yes. So you're right. But to be honest, is accountant may charge a couple of thousand for the accountant service fees.
Yes.
However, with the right structure, it's so easy to save that couple thousand in tax.
Correct. Yes, I agree. I agree. I know because you've often told me, "Hey, Opie, you're not earning enough," and
Oh,
I
did
go,
I?
"Yeah, yeah." You've still. I'm going, "Oh man, okay, all right," and and then you reply back and going, "I think you've got a good accountant," because obviously, they've structured in a way that it 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 benefits me from an tax perspective, but when you're getting lending, it's a bit tricky, right? It makes your job harder, but it is what it is.
Yeah.
Yeah.
Yeah, you're right. A lot of persons thinking trust. They always thinking trust is a fancy thing,
Yeah.
and trust that can save tax.
Mm.
But it's not trust is not for everyone.
Mm.
So especially it's not for PAYGs,
Yes.
right? And it's only works for if you have large incomes. If the income is not large enough, there's no benefit
It's no benefit, yeah.
to have the trust.
Yeah.
Same as when you purchase an investment property, especially for commercial, you can choose company or trust or individual. So yeah, a lot of people choose trust because they think it's flexible, it's a lot of benefit.
Yeah.
But don't forget, trust land tax is pretty high.
Yeah.
So it's even higher than a company.
There you go. And the lending criteria is different as well again, right?
It's the same.
It is the same?
Yeah.
Oh, okay.
Whatever the entity holding is the same, no
It's
difference.
the same. Okay.
Yeah. But from accounting point of view, it's different.
Okay. There you go.
Yeah, with the right accountant, he or she will give you the right advice.
Mm-hmm.
Say, yeah, it's company or trust or bucket company, whichever is best for you.
Best for the self-managed super funds. You can lend using that as well. Yeah. Okay.
And these days, more and more super lending we're doing.
You are doing that. Okay. Without any issues, it's just treated like another entity, right?
Not that straightforward
is
because there's a
straightforward.
lot of legal issues
Okay.
because they are heavily regulated.
They are. Yep.
And this is why the banks are not doing the super lending anymore. So any institution has banking license cannot do super fund lending.
Oh, okay.
Yeah, that's pretty much the ASIC requirement.
Is that a new thing?
Not really. That's already happened, I think, since 2018.
Okay. So hypothetically, if I've got, $200,000, $300,000 in my super fund and I want to get $1 million commercial property, say that's 30% plus closing costs roughly, can I get that 700K?
Yeah, you can get, but not from the bank.
So how would I get
From a
this?
second tier lender.
So you have to go to a second tier lender.
Yes.
That's
So
the
the
easiest.
difference, bank is a deposit taking institution.
Okay.
Second tier lender, they are just lender. They not take any deposit. So they have different regulator.
I see. Okay.
So in the current market, the banks do not do any super fund lending.
Yep.
Only the second tier lender. And even the banks, they're doing the super fund lending in the past.
Yes.
Which now they want to get rid of those books.
Okay, there you go.
So, for example, the majors, they still have super fund lending in their book. So what they're doing is they increase the rate dramatically. So someone even see 10%. So they just push you
push you
to
out.
refinance out.
Okay, there you go. I didn't know about that because obviously I've been out of the banking scene for a while now,
Yeah.
so things have changed a lot.
That's a change a lot.
Okay, awesome, Jeremy. Thank you so much for that. I think we've covered a lot of topics. Anything else that you wanted to touch on?
No, it's good. I think it's good information.
Yeah, I think so as well. Anyone who is, watching this or listening to this can, I think, hopefully will learn something and then help them move on to either their first property or their fifth property or 10th property, whatever. You're here to help. How can people get in touch with you? What's the best way? Should I leave it in the show notes? What would you like?
Yeah, no problem. I believe you can leave
Put it
all
in.
my contact details
Yep.
at the end of the show.
So anyone watching this, just go to the show notes. I'll put up Jeremy's details anyway, and I think that's it. We may catch up later down the track to get maybe another update. But I really appreciate your time. Thank you so much.
No problem.
Thank you, Mr. Jeremy.
Thanks
Take
for your
care.
time.
No worries. Thank you.